Hey guys, I'm David Mitchell, founder and CEO of TRADEway. What if God himself gave you a blueprint for how to handle your money? Well, the Bible is a practical book. Let's dive in and see what it has to say about wealth, about risk, about leverage, and about investing, and uncover how trading in the stock market can be a powerful tool for moving towards your biggest goals. We're so happy you're here. This is The Word on Investing. Hey guys, welcome back. Hey, last time we talked about leverage. We were talking about the concept of taking a small amount of money and having the potential to turn that into a large amount of money in a relatively short amount of time. Well, you have to leverage your money to do that. And we were discussing one great technique for doing just that. It's called trading on margin. And if you missed that episode, I encourage you to go back and take a listen. Well, today we're going to be talking about an even better way to leverage your money. It's called trading options. This is one of the best ways to leverage your money in the stock market, and it gives you great potential to turn a small amount of money into a large amount of money for your family in a relatively short amount of time. Now, options are kind of different. If you're not familiar with the concept, we got to kind of untie your brain a little bit and get you to kind of visualize it. So I think we can do that today. So let me give you a definition of it first, and you're going to think while I'm giving you this, oh, wow, that's a lot. But then I'm going to break it down, okay? So here's the actual formal definition of an option. It is the right, but not the obligation, to buy or sell a certain stock at a certain price on or before a certain date. Now, that sounded easy, didn't it? Let's just move right along. No, I'm kidding. We need to break this down. Okay, look. Okay, think about it. The right to buy. Okay, we're going to call that a call option. Now, some of this, don't try to make sense out of it. It's just, here's the deal. Wall Street doesn't want you to speak their language because they want to trade with your money, right? So they created somewhat difficult language. It's just different than anything you've ever used so that you won't ever learn how to do this. So we're not going to let them get away with that. So just memorize these terms. They don't make sense. They don't have to make sense. You just have to learn the language. So a call option. That is the right to buy a stock at a certain price, okay? So just remember that. The right to buy, that's a call option. And then remember the definition said the right to buy or sell. Well, the right to sell would be called a put option. Why? I don't know. It's just called a put option. Actually, I do know, but you don't need to know. I don't want to go there yet. So just remember, the right to buy a stock at a certain price is called a call option. The right to sell a stock at a certain price is called a put option. So we got two kinds of options, calls and puts. Now what you're going to learn later is if you want to make money while the stock is going up, you buy calls. If you want to make money while the stock is going down, you buy puts. But we'll get to that. So let's go on with our definition now. The right to buy, that's a call option, or sell, that's a put option, a certain stock at a certain price. Now that certain price, we're going to call that the strike price. So now you have three concepts here to add to your vocabulary: the call option, the put option, and a thing called the strike price. Okay, so let's keep going here. The right to buy is a call option, or sell, a put option, a certain stock at a certain price, that's the strike price, on or before a certain date, and we're going to call that the expiration date. It's normally the third Friday of a particular month. It could be any month, so you can go out as many months as you want and pick an option, and we'll talk about how to choose them later. Okay, so now think about it. You got four pieces of terminology to learn: call option, put option, strike price, and expiration date. See, that's not so hard. All right, so let's untie the brain a little bit, though. Let's do it by talking about something very familiar. Real estate. Now, why is that familiar? I don't know. I guess because in our lifetime, most of us buy a house or something. So you may not be in real estate, but you own a house probably, and you've bought a house. So this just seems to make sense. So let's put it in real estate terms, okay? So think about this. Let's say you're driving down the street, you're looking for a house, and your spouse is not with you, but you see the perfect house. And let's just say, all right, let's say it's in Central Texas where you can actually get a nice house for $150,000. I know that makes no sense to a lot of you guys, but let's take that example. So let's say you see this beautiful house. So picture, if you guys are not from Texas, picture like an $800,000 house. That's what we're looking at. But you're only going to pay $150,000 in Texas. Okay, so Picture this beautiful house. Your spouse is not with you. It's a $150,000 house. And you love it. You go and you look at it, but you can't make the decision alone. So what do? You say, hey, could I put down an earnest money contract so that you would hold this house for, 15 days, give me time to bring my wife or my husband back here to see the house. I'll give you $1,500 in earnest money if you'll hold it for me at this price for 15 days. And they say, sure, I'll do that. So now you have an earnest money contract. Well, what is that? That is an option to buy the house at a certain price at $150,000 until a certain date called the expiration date, which is 15 days out, right? So it makes perfect sense. So now you've got the right to buy that house at $150,000 as long as you do it within the 15 days before the expiration date. Now, what if something happens and they build $4 or $5 million houses, within a quarter of a mile of this property? All of a sudden, the value goes up and it's worth $300,000 now. Well, guess what? You bring your spouse back. They love the house. They say, we want it. You still have the right to buy that $300,000 house for $150,000 because you locked in the price with your earnest money agreement. And that's exactly the same way that options work, only you're dealing with stocks rather than a house. So think about it. Let's go back through the example. You paid $1,500 for an earnest money contract. Well, the price you paid for the earnest money contract, if you put that over into the stock option world, we're going to call that the premium. So the premium is the price that you pay for the option to lock in the price of that stock. All right, that'd be the same as the earnest money. The premium is what you pay to own the option to buy the stock. Start to say the house, okay? So now let's keep moving. So now you have the right to purchase that house, but not the obligation. See, you're not obligated to buy it. You can say, you know what? My spouse didn't like it. We don't want it. Well, probably they're going to keep the earnest money, but you didn't have to come up with $150,000. So you don't have the obligation to buy it, but you do have the right. You see? Same way with the stock market world. Here, that right to purchase the house, well, in this case, we're purchasing a stock. The right to purchase the stock is called an option. Now, you have two kinds, remember, call options and put options, but let's just call it an option for now. So now the option is your right to buy that stock at a certain price as long as you do it before the expiration date. See, kind of makes sense. Now, what about the price of the house, $150,000? So we've locked that in, see, by the earnest money contract. We've locked it in. And so in the stock world, the price that we lock that stock in at is called the strike price. So now let's start using a little bit of an example for the stock. Let's say it's a $100 stock. Okay, now we know stocks can move up or down at any time. And if we're in a nice bull market, they tend to move up, don't they? So what if you could lock that stock that you really like? Let's say it's a company you love. It's XYZ company, and you just love this company. You love their products. You love their ownership, and you love their management, and you love the fact that they're making good returns on investment, and their earnings ratio is just going crazy. Their earnings are growing quarter by quarter. So you love the stock, and it's $100 a share, and you love the price. So what if you wanted to lock that price in? Well, you could buy a call option and lock that price in at a strike price of $100, which in this case is the current stock price. But, that's going to change 3 minutes from now. It may be $101, right? But you just locked it in. The minute you bought that call option, you locked it in at $100. Why? Because you bought a call option with the strike price of $100. Now, that is going to only lock that $100 in, though, for a certain time period. So there are two components when you purchase an option. Two things. One is, what is the strike price? Now, we kind of talked about that. So you're wanting to lock it in. What is the price you want to lock that thing in at? Is the $100 fair? Lock it in at $100. There's your strike price. The only other thing you have to determine in order to go shopping for options on this particular stock, because there's hundreds of them. There's hundreds of options on XYZ stock. The only other thing you need is how far out does it expire? So let's go out about 4 months, and we'll just use that as an example. So let's say it's January right now. We might go out to May 15th. And choose that as our expiration date. So now you've chosen $100 as the strike price, and you've chosen May 15th as the expiration date, 4 months out in the future, for example, here. So now that you've locked in the strike price and the expiration date, that is the only call option on that particular stock that happens like that. So it has its own little ticker symbol for that option. You don't even need to know that, though. The software will find that for you. So isn't that cool? You just need to know two things. What is the strike price? What is the expiration date? Now you've chosen the particular call option that you wanted to purchase, and that's going to lock in this XYZ stock at $100 for 4 months. So if it went up to $150 in 3 months, you now have the right to buy it for $100 as long as you do it before that expiration date out there on May 15th. Isn't that cool? Now your mind starts to think, whoa, what could I do with this power? Now you think about this. God has put a lot of stuff on the shelf for his people. I don't think Wall Street thought they were creating these options for Christians to make money with. I think they were doing it for themselves, for selfish reasons, and that's fine. Capitalism sort of works well that way, doesn't it? But you know what? God had you in his mind when he had them to create these products. See, the unsaved people serve God too. They just don't know it, right? So God uses them to put everything on the shelf that his people need, that his children need. And so there it is. You now have options. You now know it's there for you. So here we have this example going on here. Now you've got the right to buy this $100 stock for $100, even if it went up to $200, as long as it's before that expiration date out there, 4 months out in the future, May 15th, whatever, then you have that option and you have the right to buy that stock. So the stock goes up to $200. You say, would I like to buy that for $100 instead and turn around in 2 minutes and sell it at the market price of $200? How much money would I make? $100, right? I'd make $100 per share. So what if I controlled 1,000 shares and I did that? Well, my soul, you'd make $100,000. So this is why options is so powerful. It gives you leverage. Now, we're not even to the best part yet. We're just kind of talking about the definition. So what is it? It's the right to buy or sell a certain stock at a certain price on or before a certain date. Now, we haven't even talked about puts yet because that is even more difficult, and we'll save that for later. The brain works better thinking about up plays, where the stock's moving up, and that's where we use calls. So we're going to continue the example with call options, and we'll have another show where we talk about puts, I promise. All right, so here's the thing to remember for now. The price of the options, there nearly every stock has options available. Not all stocks, but every good stock has options available. And just remember this, we have a little rule of thumb to just kind of help unlock the brain again, is we have the fact that the price of the option on that stock is always going to cost much less than if you actually bought the stock. And 10% of the price is a pretty good rule of thumb. For example, here we're using a $100 stock. So you'd have to come up with $100 to buy one share. So if you wanted 1,000 shares, that'd be $100,000. All right, that's a lot of money. But we're supposed to be trading with a relatively small amount. Remember, because 80% of our money is in long-term buy and hold, we're only using 15 to 20% of our money. So we may not want to take $100,000 and buy one stock with it. So guess what? The call option of that $100 stock is usually around $10 or less. It might be about $8 per share. So now for $8,000, you can control the same number of shares it would take $100,000 to control if you bought the stock. Are you starting to see the leverage? The leverage is almost like it makes every dollar in your account worth $10. Now, it's not always 10. Sometimes it's $7. Sometimes it's $14. But 10% is a good rule of thumb. So just move the decimal over one place to the left. I mean, if it's a $50 stock, move it over one place. It's $5 for the option to control the same number. So let's do that one. 1,000 shares of a $50 stock would cost you $50,000, but you can control the same 1,000 shares for $5,000 if you buy the $5 call options. Are you starting to see the math here? This is amazing leverage. Remember, the Wall Street guys know how to do it. You hadn't really had this power till now. And that's why TRADEway's great mission is to get the middle class to have the same power, the same tools of leverage that the people that run the country have. And I think, when you think about that and you pass these skill sets down to your kids and grandkids, don't you think that will give you potential to have generational wealth over the next 3 generations? Just knowing this knowledge. Isn't it true that God tells us that knowledge and understanding brings wealth. The Bible says it again and again. It's not an unconditional promise. It's conditional. You have to get the skill sets. That's the knowledge and understanding, but that's what you're doing with us. And we're going to give you the skill sets to give you that potential in this particular business, which is turning stock and options trading into a family business. That's what this thing is all about. And guess what? The concept of leverage is taught by God, the creator of the universe. He teaches it in the Bible. The parable of the talents teaches it. It's all over the place in the Bible. And so it's a sound principle, just like the law of gravity. And it's how wealth is created according to the creator of the universe and the creator of economics, by the way. So now I want to put a disclaimer. I'm not saying that the Bible teaches our stock trading strategies. That came from our family. But we're just using a principle that God put out there in the universe, the principle of leverage. And we found a way to capture that for our family in the physical world. The Lord had already put that on the shelf in the options market. All right. So now, think about all this. I know this is going a little fast. You don't have pictures and graphs. What if you wanted that? Well, you could go out to TRADEway.com. There's a couple of things you can get involved with that are amazing. One is called Step 1, Start Your Journey, and that's a live virtual event. And I'm telling you, it's a 2-day event. It's amazing. When you leave that event, you will know more than a lot of the things your broker knows, more than even your financial advisor, things he won't know that you will know, and things that can empower your family. Now, another route you can go if you go out to TRADEway.com is called the Trade in 30 Days Challenge. And the difference there is it's not a live event, so you can hit the pause button. You can stretch that out over 30 days and learn tasks one at a time if you prefer to go that route. So think about that. You've got the Step 1, Start Your Journey, the live virtual 2-day event, or you've got the Trade in 30 Days Challenge with TRADEway. TRADEway.com. Go out and check it out. Now, as we go on through this, remember that most good stocks have options, and the rule of thumb is the price of the option, that's called the premium, remember? The premium is going to cost you about 10% of what the stock would have cost you per share. So you can, in theory, have 10 times the number of shares for 1/10 the money, if you want to look at it that way. So now, here's what your brain wants to do. I remember this because I remember the first time I was ever exposed to options. They didn't even invent these things till 1973, which was my first year out of high school. I graduated in 72. So I studied them early on and tried to start to figure them out way back then. And so I thought, my goodness, what I can do is I will just buy the call options on this $100 stock, and then maybe for 1,000 shares, and for $10,000, I can control those 1,000 shares. And what I'll do when that stock moves up to $200, I will just call in those shares and say, no, I want them for 100, and I have the right to get them for 100. Give me my shares. Well, what it didn't occur to me at my young age was, well, but I still would have to have 100,000 to actually buy the shares, even at 100. But I could turn right around in a nanosecond and sell them for 200 and make $100,000, but I didn't have the 100,000. So what did I do? I realized very quickly, guess what? I'm not in this to convert it to actual stock and then sell the stock at the higher price and then give myself the profits there. I'm not in it to do that. I'm just going to trade the option. And it occurred to me that the option is a commodity just as much as the stock is. So I can actually just buy the call option when the stock's at 100. When that stock moves up to 200, guess what the call option does? It gains value, and it can move up the same amount of dollars per share. Now, it doesn't always. It depends on a thing called the delta, but we're not going to go there today. But that's something you'll learn if you go out there someday. If you take Step 1, Start Your Journey, there's also a Step 2, and it talks all about options. It's a 2-day live virtual event, talks all about options. So think about this. Let's say that $100 stock that I bought 1,000 shares, or I controlled 1,000 shares by paying $10 per share for the call option. So for $10,000, I'm controlling 1,000 shares of that $100 stock. It moves up to 200. Well, I mean, that gained $100, didn't it, in value? Do you realize that over that same period of time that call option went from $10 to being worth $110 per share? So I just turn around and sell the call option to the next guy for $110. I bought it for $10, so I made $100 a share. I have 1,000 shares. So I still made the $100,000. But I did that with a $10,000 investment rather than a $100,000 investment, which I didn't have at the time. Does that make sense? Wow, that'll make you lose a little sleep tonight. And of course, that is my job. So I hope you enjoyed the show today. Go out to TRADEway.com, by the way. Don't forget to check out Step 1, Start Your Journey, the live virtual 2-day event, all about getting started in the stock market. And you can even check out Step 2, but you have to finish Step 1 first, or we don't allow you to take it. But you could check out Step 2, which is all about options. And you can also sign up for the Trade in 30-Day Challenge. Now, if you thought this created a little bit of interest in your life today, you know what? You might have some friends that have similar interests. So please go out and rate and review this show. That'll help your friends find us, and that'll be awesome. All right, thanks. We'll see you next time.